We finished down on the week, so what happened? Well, here's the thing. The big main catalyst for a while has been coronavirus. I've talked a lot about coronavirus, so if you need to do some history, go to the past videos. And we saw a big drop in China, down from 1,600 cases to 300, 400 cases. That's massive in Hubei. It basically seems like it's calming down in China. But we're starting to see big outbursts in South Korea and Japan. And it looks like Japan is going to hit recession. And China's been offline all quarter, so their GDP is probably going to be negative, at least for this quarter, maybe for next quarter. It's going to take a little bit for their factories to get going and everything. So we might see 2 back-to-back Chinese quarters of negative GDP growth. What does that mean? It means recession. If China's in recession, Japan's in recession, possibly even South Korea's in recession, how is that going to impact the rest of the world? And why is the stock market not really that far down? Let's talk about the stock market first, because there's a lot to talk about here. So, when the coronavirus was starting to spread initially, we had like a 3% drop over the course of a couple days, and then we quickly recovered back to the all-time highs, and we've kind of just been shredding flat. But yesterday, we had a big, and then today, same thing in the morning. So we did that drop, and then we recovered slowly throughout the course of the day. Didn't recover all the way either day. Ended the week down. But it seems like investors haven't really been factoring in coronavirus this entire time. There's been the one thing we know is it's going to go away. But we know it's going to go away. Obviously, the world's going to continue. But what effect is it going to have, and what long-term repercussions is that going to have, if any? So here's what I think. And if you watch my 20% case of a recession, I'm still standing on that. I might be bumping that up to 25% as of today. So companies produce a lot of products in China, and the products aren't being produced. So that means companies aren't making that money. They don't have the products to sell. They might be making money on inventory they already made, but if you go to an Apple store right now, you're going to see a lot of empty shelves. It's just the way it is. If you want an iPhone, good luck. Good luck. So that demand, it's there. Companies should be making those sales, but they can't. And they're not going to be making those sales in China either, because the Chinese people, they're not making their money. They have their expenses. As soon as they get back to work and get those incomes back and everything, they're going to have expenses to catch up on. They can't buy those iPhones. They can't buy those goods, whatever company it is, LVMH, they're not going to be buying Louis Vuitton. So the market, I think, hasn't been accounting for that as much. They've kind of just been like, it's going to be back to normal within a month or whatever. The thing is, it's not. It's people are offline, not making money. They've got other expenses. It's an economic effect, which is going to affect the economy, which is super inflated and at super all-time highs. So, for example, tech is the big growth sector, right? It's tech. But the valuations are super inflated. Microsoft is trading at over a 30 PE. Google, same thing. Apple, over 25. And this week, tech was down like 2 or 3%, which is a lot. They were down more than the market, and it's tech. Tech has kind of just been the one sector that's continually just kept growing, no matter what. They hadn't felt for coronavirus at all. Last week, people were saying nobody needs to worry about tech because they don't really do a lot of sales in China. Apple, sure, they're a hardware company, but everyone wants iPhones. They're still going to want their iPhones. Well, guess what? They were the first company to say that they weren't going to meet their quarterly revenue. And they came out with that on Monday, beginning of this week, after people were saying, don't worry about tech. Tech was down big. So where does that leave us as Americans who don't have coronavirus here? So I don't expect coronavirus to come here. Maybe a couple cases, not a big deal. But it seems like the rest of the world could begin going into recession. But China, the Chinese government, the People's Bank of China, which is run by the government, has injected a lot of liquidity into the market. They've been printing money, and they've been buying bonds, government bonds from the people, which gives them money to spend. Now, we're going to pause on that. Okay, remember that. The Chinese economy is built on sand. Same thing with Russia. The past 30 years, China has been siphoning the strength of the American economy for their own benefit. They've been taking our jobs. They've been buying our food, our farmer stuff, all that, our agriculture. And Trump is essentially running on make America great again. Let's bring those things back to America. So the issue right now is supply chain. Apple, a lot of other companies, produce all their stuff in China. But Trump doesn't want that. Trump wants them to produce it here because the best welfare program is jobs. It's high-paying jobs, not fucking food stamps, okay? Excuse my French, but it's not. It's jobs, high-paid jobs. So, trying to make America great again. And long-term, America could be getting our jobs and factories and our supply chain back on American soil, which is great for our country. And China's basically stolen from us because they've abused our government. And there are a lot of people in powerful positions. And the Chinese government, China's been around for 4,000 years. They've adopted their philosophy. If you read The Art of War, which is written by an ancient Chinese general, you will understand all of this. Their strategy is to appease the people of power, give them a taste of the good life, and make agreements with them. And, give the people of power their stuff, and they get their stuff and help their people. And they've taken 300 million people out of poverty. So it's worked for them. But they got to create their own economy. And that's kind of what the U.S. and Brexit, Trump and Brexit is all about. It's nationalism, the shrinking of powerful stuff and people, and anti-globalization, and this kind of nationalism. It's not a curse word. It's not a curse word. It's nationalism, the power of nations. Very similar to statehoods, the division of power. We don't want globalization, which implies one global power, which China is doing by going in through Africa and Venezuela and all this stuff. But anyways, back to the pause. We're hitting resume. So China injects a lot of liquidity, and we're Americans. And we, fundamentally, America is super strong. We've got a great economy. Nothing is going wrong in America. We're getting our jobs back. Our wages are going up. African American and Hispanic American unemployments are at their lowest levels in history. And everything is good. And we're probably not going to have a socialist president. And Trump is probably going to get reelected as long as Russia doesn't interfere with the election, and China, even though that's their number one goal, is to make sure Trump doesn't win. But a lot of liquidity in the markets in China and all these other countries. So they're going into recession. There's not a real good opportunity to invest in China right now. There's a couple companies I like, Jinko Solar, yada, yada. But those people have to invest. And where's the best place to invest? It's the United States of America. So if the rest of the world goes into recession, which is seemingly more and more likely, I don't think we have reason for concern here in America. We've got great American companies, and sure, I'm not saying that we're not going to see a downturn. We're going to see a downturn, I think. I think a lot of stock prices are too inflated, especially tech. I think we need to bring those PEs down to the 20s. But the thing is, there's a lot of foreign liquidity, and those people still have that money, and they still need to invest it. They don't want cash sitting on the sidelines in shitty currencies that are printing money. So I think a lot of them might start buying American assets, and that's going to keep our assets and our companies strong, continue to give them access to liquidity so they can continue to grow and expand when they need to. And I think here in America, we're good. I really do. I think we might see the next 2 months. So I think in long term, I don't think in the next week. It's going to be a rough next week. Monday, I'm not trying to bet on that, but I think Monday we're going to be down again. But I think in America, we're in a good spot. I think there's a 25% chance we see that downturn. I think there's, higher probabilities in different areas of the world, maybe lower probabilities in other areas of the world. I think Great Britain, close to 10% chance of recession. So, yeah, that's it. I'm going to meditate over all of this on the weekend. I hope you got the gist of what I'm trying to say. And if you got any questions, got any comments, leave them in the comments. I'm here to help you make money, build your wealth, answer your questions, provide you value. And maybe we'll do an IG Live tomorrow and get face-to-face if you need some personal consulting, get some portfolio management in there. And, peace.